take profits at the first point of support or resistance. Okay, now you don't have to take all profits off the table, but this is the number one thing that I think will help improve your trading, especially your profitability and especially your win rate. So if you're a trader that is really struggling with your win rate at the moment and it's getting you down, you don't like the fact that you've got a lower win rate, you may still be profitable in terms of your risk reward ratios, but I think this is something that's underrated in trading at the moment, and I think it's understanding when a good time to take your profits off the table is. Now I've got an example here. I'm on euro US dollar here, and I will show you a live example that I used today. I traded pound US dollar short, and I'll show you that in a moment. But looking at euro US dollar here is the reason why I love taking profits at the first points of resistance. So I've got a daily chart here on the left hand side and the top, and I've got a 4-hour time frame here. Now what I'm doing there is I'm just looking at my sort of overall higher time frame sort of biases at that point. Obviously I can see that Friday we had a bit of a pin candle there formed from NFP, looking to see will that momentum maybe continue today or will we push to the downside. Now looking at the 4-hour time frame, we're trading above the 50 moving average. Usually if price is above this, I want to be more of a buyer in the market. Doesn't mean that I can't get short, but it just means that I'm looking a bit more of a buyer. But over here I've got the 15-minute time frame, and this is more important for those day traders in the market, right? Because what I see time and time again are people trying to extend their risk reward ratios based off of a fixed target. Okay, so you might say, well, I have a 3-to-1 in terms of reward to risk ratio, and that's what works for me, and that's great. But is that the most sensible thing to be doing? Because the market moves from these points, and the chart is showing us the history of where buyers and sellers have activated orders within the market. Essentially, we know that buyers got long in here, we know that sellers got short up here, I know that sellers got short here, I know that buyers got long here. So it makes sense that if I was looking for opportunities is to do business around those points, whether that be entering around these points or taking profits at these points. And one way that I use this is by looking at taking profits. So you can see today, obviously the market rallied. What I did was I just drew a dotted line here to suggest that if price came down to this point, this would be a good place to exit positions or enter positions. And you can see the market rallied. You can see I've got 2 lines in here. They are formed from the previous swing highs. These would be really great levels to take profits on a potential position, because you can see we've come up into these levels now, starting to see a little bit of selling. Why is that? The players that have got long here, they're exiting their positions at this moment in time. Price may continue on through. It may follow the higher time frame bias. We don't know that. So the best thing to do for you is, if you are trading in terms of day trading styles, then you need to be taking your profits at the first point of resistance. Now let me show you a live example that I did on cable today. So I'm going to bring down my trade terminal here, and you can see this is the couple of trades that I've had recently on cable. Now today I could see that the market was what I like to call balanced. Now balanced market is means basically that you're in a range. The market is in a trading range, but I only want to be long or short from highs or lows. Okay, so I saw that the market then created these highs in here and essentially waited for price to come to those highs, executed a short position targeted down towards these lows. Now let's say I was a trader looking for X, Y, and Z. Like let's say I was looking for a 3-to-1 or a 4-to-1 risk reward ratio. Now my original entry was there. I actually placed a stop loss just above this swing high. It was around about 8 pips in total, and if I just drag this down here, you can see it was about 1.5 to 1. But if I was trying to hold out for a 3-to-1 risk reward ratio there, I would be now worrying about my position, because the market has pulled back a little bit and the market hasn't actually reached this area today. So I don't know throughout the whole day whether buyers or sellers are even interested at trading down towards this area where the 3-to-1 target is. So I would always look to take profits around a previous area where prices rejected from, because it will just help you gain profits into your trading account. It will also help you with your mindset, and it will also help you with your win percentage. So hopefully that will help you change your game in trading. If it does, and if it does make sense, leave a comment down below. What's your favorite tip that you could teach others? Let me know.